It is good evening. So, what happened today in today's daily candle? I'm going to talk about it. Right now, what I'm seeing with the way we closed today from the daily chart perspective could be a 2022 model. So, this down close candle here on the 19th of December, no, sorry, 20th of December 2023, that is a breaker. And we have a fair value gap that was left. Could be a 2022 model with a market shift beneath that 20 December low. Um, I know I said how if this fair value gap, if price comes back into it and spends a lot of time inside of it, I wouldn't really, if it wants to go higher, it shouldn't really, it should just go into it real quick and then wick out of it. So I don't know. We'll see what happens Friday during NFP, and I'll have to wait until the week close to really get a good idea of what the rest of the month is going to want to do for January. But right now, this is just kind of what it's looking like, and I mean, I'll have to wait until NFP happens to get a better idea. But going down to the hourly chart, one thing today is um, we haven't, and yesterday we've left a lot of highs intact from these sessions, right? Like all these boxes here in colors are sessions. So Asia session, London session, New York AM and PM. So we've left a lot of these highs intact. And basically what this is telling me, especially today down in this area, kind of just slightly trended lower. This could be conditioning all these highs to have a lot of buy side in them. And then if we do want to run higher, right, I'd look for price to just kind of slice through that like a hot knife going through butter. Okay, like a rocket ship going up into the sky. I'd want it to kind of ignore all these highs and just go straight through them. Um, Create a market shift to run back to the daily fair value gap up here. Another thing too is if you do a 60-day look back from the beginning of January, because that's when the market shift happened down here, right, it is like only lower really, mostly lower. So within the next 60 days, if we start to go lower, I'm anchoring this 60-day look back from January 1st to the 5th of October. I'm anchoring that as what the algorithm is seeing. And I'm gonna start to do some 1 hour, the same thing with the 1 hour, 3-day look back instead of 6-day look back. But right now it's just kind of like uh the beginning of the month. So again, that's why I'm saying I'm waiting till NFP before talking more about day trades. So I'm still gonna talk more about scalps. But going into this morning, I posted a trade, a sped up trade. You can check it out on my channel with music of the trade I took live. So what I was thinking going into that trade was because we haven't hit one of these highs, I wanted to see a bit higher pricing. I didn't want to see it dip down like it did the previous day. So what ended up happening is it kind of consolidated. Price was held down lower, which is interesting. But going down the 15-minute chart, the same cycles are still there. So the red session, green session, blue, and purple. But now there's four more on each inside each square, which are 90-minute cycles, a quarter of the session. And same concept applies. London looked pretty nice. Asia accumulated. London, here you see accumulation during the green cycle. Okay, a reversal in the red, leading to accumulation in the green cycle. Then the blue cycle manipulates and delivers lower in the same cycle. Reaccumulation in the next cycle. Continuation in the next cycle, or redistribution. And then more accumulation to another redistribution in the 9:30 open, except this time you see how we cleared just like we did in London. Actually, not this time, the same time, just like we did in London, we cleared the highs and then we went lower, and it waited until 10 o'clock to do so because it was high impact news at 10 o'clock. So that is when it cleared that high. It didn't do it immediately towards the beginning of the cycle. All right, and On the 5 minute, what I looked for on the 5 minute was I just kind of saw this low. I noted how the previous cycle low had been hit, and then I was looking for the cycle high. That's all I was looking for. I was also making allowance for this high here, the purple cycle, because it had accumulated, and the current cycle's high. So it was, however, a redistribution cycle. So that's why it was like, you know, possible that it doesn't trade back up here and it just continues to run lower. All right, but that was just still there. I took profit at this high because I didn't want to leave anything else running for that high just because it would be lower probability. All right. That was just in case we wanted to market shift and we wanted to start trading higher. I would want to see this high. But obviously that didn't happen. So going down to the 1 minute chart, okay, there is that consolidation. And the same way as we trade underneath that low, there's a specific time I want to clear this low at, and it's during the Q2. So this Q1, I saw this as accumulation, right? A consolidation going into Q2. So now I move down from this low. I'm now using that low. So, and I'm splitting the Q2, which should be at 922.5, not 923. But I can't really do anything about that. So the Q1 to Q3, I'm looking for that to manipulate lower. So to trade lower before Q3 delivers higher. And then Q3, we didn't do a nice and clean delivery higher because the 10 o'clock news. It went lower to look for longs before, in order for 10 o'clock to deliver higher. And then it dumped right after that. So that's just kind of like more accumulation before trading higher. And as you split this cycle up, because you know there's going to be high impact, there's going to be volatility during the cycle. You know the cycle is going to move, just like 930 is going to have volatility and 930 is going to move. You can do the same thing that I did at 930 inside the 10 o'clock cycle. Okay, and so instead of, because there's not really any fair value gaps and order blocks, I bought at that low on the video, and it came back on me. My stop was at break even, and then I wanted to re-enter lower, but it instead re-entered higher. So what happened? Yeah, I re-entered higher, and then the trade then at 934, which is, if I go down to the 15-second chart, you'll be able to see better. But accumulation, manipulation lower, and then 933 and 45. I don't really know exactly what that should be, right? Yeah, because this is, yeah. So the quarter, yeah, it should be almost precise, 933.45, and then that's when it starts to go higher, and then it continues to go higher in the purple, above only, well, it goes above this one here. I'm gonna mark that out. Goes above that one at 10, but I was only looking for this high here during this distribution cycle. So when I saw that get hit during the distribution cycle, I took profits. And then if you do the same thing, but for the 10 o'clock hour, which would be, let me go back. Um, what happened to this during the third quarter? If you want it to deliver higher, and go back to the 15-second. Okay, accumulation, manipulation lower, and right at the blue one, you can look for anything to buy off of. There's this big fair value gap here. Okay, you can use an inverse fair value gap. You can use that. Okay, when it closes above there, you can buy at the high of it when it closes, and then have your stop. I would have my stop beneath this candle body at least, and then even 10 o'clock wouldn't take you out. You can buy at that down close candle right as an order block when it closes above there, or you can buy with this fair value gap. Okay, and then I'm going to use the replay because I want to see what hit first. Yeah, so it would have hit. Oh no, it went lower and then went higher. Yeah, so there's just different ideas. Those are some different ideas you can use in order to distribute higher, right? And then some more things on the 30-second to that gap. Yeah. So, but the point is, yeah, it distributed higher up to that high, and then it went lower in reverse into the next one, and continued running lower after that, dumping lower. Um, so afterwards, you get a little reversal, and because the next cycle afterwards, the this one, the 10:30 to 12, because we've have no more low, like no daily low, no previous session low, no previous 90 cycle low. Once it gets hit here at the 1022 low, once it hits in Q1, we have nothing lower to reach for. So there's only higher you can look for. Now notice it doesn't go higher to these highs, doesn't have to. It just goes higher a little bit to retrace higher and then continue consolidation and create a range, which the next cycle kind of continues that too. This is more accumulation. In the afternoon, we have news at 14 o'clock, takes out both sides. And that's pretty good price action. I'll break that down too. But then, you notice that, okay, if you're at here at 10:30 and, there's nothing else to do because there's nothing else lower, so you want to look for higher pricing, again, break the cycle down into 4 different parts: accumulation, manipulation, distribution, and another distribution to Q2, which can also be manipulation. All right, because take this smaller cycle in quarters and bring it up to here. See accumulation, manipulation, distribution. So you could have went short at Q3. You don't even need to use anything to go short. You can just press the sell button at Q3 when you see this happening, or you can just press the buy button right here at 1042 when you see that happening. Right, it's the same model. Price just does that over. Well, it's not really a model. It's not really a strategy. It's just what price does. It's how price behaves. Like, I don't know how else to really say it. It's not a strategy or anything. You need to use these cycles and build your own strategy. You can't just like you need to know when it's gonna work, when it's not gonna work. You can only know that by studying. Um, but same thing happens into the afternoon. Okay, right? Like accumulation, manipulation, distribution. I was part of the manipulation. I have only a screenshot of the trade on my phone. I don't have the executions anymore because they disappear. But so now what you're gonna want to do is you're gonna want to mark out the current day low as liquidity. You're gonna want to mark out previous cycle low, 90-minute cycle. You're gonna want to mark out the previous 20-minute cycle, 22-minute, sorry. And then you want to also mark out the highs. These are relative equal highs. So there's a lot of liquidity up here. And you can also mark out the morning highs. Okay, so when I saw the consolidation at Q1, I was like, okay, Q2, this should be good. I split Q2 up into 4 different quarters. And then I waited to see which direction FOMC was likely to deliver in. So now going down to 15 seconds. When I saw it go higher above this high and then try to go higher again and break lower and leave a fair value gap here, I knew that, okay, it attempted to go higher because at first it went lower, then it went higher, and then it failed, and then it went higher again, and then it failed again and left the big fair value gap lower. I was like, okay, this is gonna go lower. So I looked for an entry here in the middle of the gap, and it was only a scalp, so I only held it to this low. Stop loss was over here. And yeah, then if I had held it all the way down to this low, like I would have gotten funded, or like on the verge of getting funded, but instead I just held it down here and then got back on the road. If I had once this low would have gotten hit and this low down here, it happened during this distribution cycle because the manipulation here was actually higher. So accumulation, manipulation higher, and a distribution lower. Inside a manipulation lower. So that's something important to note, right? You know, this is quarter two of the 130 90-minute cycle. So accumulation, right here, okay, manipulation lower. So we're breaking down the manipulation to 4 quarters, and we're seeing accumulation in the smaller quarter, manipulation higher, just like we see manipulation lower in the bigger quarter. And then we see the distribution lower, which is manipulation on the higher time frame. Manipulation on the higher time frame. Okay, and you can tell right away the best cycles to trade are the green one, blue one, and purple one can sometimes be good. The red one, oftentimes, more than not, it's not too good. But the next one, it's not that bad. But the next one, an exception is that it's also on the higher time frame. It's a distribution higher. So I moved over to the next one. Okay, so you see this one predominantly the whole time goes higher, and at the end it reverses in the last one. Okay, so you could press the sell button up here literally because you're seeing how these relative equal highs got hit in the third quarter. You're seeing consolidation. All you need to do is wait until 231 and a half, press the sell button, or you can wait for an inverse valley gap. Like I'm gonna zoom in, that gap right there. Okay, that gap, you can go short on it. You can go once price breaks below this order block, you can go short there. I don't know, whatever you want to do. Okay, you don't even need a good idea to go short. This isn't a strategy where it's like, okay, sell here, buy here. You decide where to sell and buy. Use the time, which is, this is all fractal, it's all algorithmic. It's how price books, it's how it moves. Just use this to filter out which trades are good, which trades are bad. And then there's, you can use this to find whatever you trade you gravitate to the most, whatever you kind of are more comfortable trading in, use this to filter that. And well, then what does it do the next cycle till 3? It consolidates because it doesn't really have anything else to do. It's already like the really, like, the two most important things you need to know is this time. You need to understand this time, and you need to understand liquidity. All these lines on my chart, that's like liquidity, buy side and sell side liquidity, the premium and the discount levels. That's all price does. It trades to premium and discount levels at certain times. It's price and time, the simplest things you can understand. Now, of course, when I present it like this, it seems very complicated, and to some people it might seem easier to plot random indicators on your chart. But this is how price books. And if you do it enough, you go on your own chart and you try and look at these things yourself. And I mean, whatever I'm drawing out here, right? I would go on your own chart and do the same thing, every single play I did, and do the same thing and look at them the next day. And that's the only way you're going to get the hang of it. That's the only way you're going to, be like, oh, I see what he's talking about. I can see it now by myself. The only way you're going to do that is if you study these moves on your own. So that's about it. And yeah, thank you for watching.